Hello, and welcome to this episode of Mini Masterclass Live. We hold these masterclasses on the second and fourth Thursday of every month. Most of the time, sometimes we have to switch it up a bit at 4 p.m. Pacific time. And today's topic is going to be controllership versus accounting. And what we do with these mini masterclasses is we bring you all kinds of content that is relative to any and all businesses, whether or not you're our customer. If you are a business owner, you can benefit from the information that we provide on these. So today, the reason I want to talk about this subject in particular is it's been coming up a lot lately. There's a lot of reasons why. I'll name a few for you. AI. AI is coming, it's here actually, and it is intended to replace a lot of transactional type work and data entry type work, which a lot of accounting professionals fear will eventually replace them. But we take the standpoint of actually it should increase our capacity to do more for our clients. There's just only so many hours in a day. And when you have to spend so much of your time actually entering information correctly, that takes away from the time that you can then use that information in order to help serve your clients from a strategic business standpoint. So we're actually not threatened by the AI emergence yet, anyway. I really think it'll be a very long time before it is actually going to destroy any kind of relationship with accountants and their customers. I think it's actually going to lend to us deepening those relationships. But that's number one. Therefore, services like controllership can come in and be way more of service than the actual data entry of accounting and entering the information on the front end. So that's number one. Number two is there is just at some point in time, it does not make sense, or it could not make sense for a business to have an outsourced accounting solution. So outsource accounting means that you don't have a staff member on staff in your office working just for your company 8 hours a day. It means that you have a service that you're paying for, like a vendor relationship, that is then doing the accounting for you on a part-time basis. If you are hiring a full-time outsource accounting solution, that is rare. Usually by the time you need a full-time person, either your firm that you're engaging is very large and can actually do that capacity-wise, which means they have to charge you enough to do that, or you at that point start looking out, we maybe need to bring someone in-house. And we're going to talk about price ranges and salary ranges for these different positions so you really understand what you're getting when you outsource versus in-house. But at that point in time, you really don't know who you're getting or what you're getting until they're in there working. Same as outsourcing, but it's when they're yours 8 hours a day, it's always good to have another set of eyes that's kind of removed from the everyday operations, reviewing their work and helping you make sure you can use their work and that they're not creating messes, which I have seen many times, that they know what they're doing and can actually do the things they're tasked to do, which I've seen many times that they don't and they need that support, and also to help you then utilize the information that they're busy entering to make your business decisions that they may not have the skill set to do with you or the time or capacity to do that part in addition to everything else that they're doing. And lastly, it's just in the industry world of accounting, it's just been a big topic at conferences and in mastermind groups and in roundtables about expanding the service offerings into more controllership and fractional CFO work so that you can sustain long-term relationships versus having transactional relationships with your clients. So I want to bring this up because I many times have engaged in conversations with clients who think think they're signing up for bookkeeping, but then want controller type duties to be facilitated by their bookkeeper, or they expect that bookkeeping includes controllership, fractional CFO-ship, and all these other things that it does not necessarily include that you do need to pay extra for. And so I want to just break it down for you so you understand exactly what the differences are, when you should institute one or the other and what they cost. So here we go. I am actually going to bring up a screen share so that there's a visual in addition to what I'm talking about here. So this is just a little snippet of really what the differences are between controllership and accounting. Accounting will handle your everyday bookkeeping. So that is either outsourced or in-house everyday transactions. That's what the accountants do. A controller will oversee those accounting operations, which means they go in with quality control in mind. So they're reviewing the transactions that have already been posted by your in-house team, by you yourself if you're DIYing your books, or whoever you have outsourced the bookkeeping to. Your accountant will have record financial transactions, or they will record financial transactions for you, but the controller will ensure the accuracy and compliance of those transactions. Every single industry has a different set of compliance rules, in addition to federal compliance, state compliance, and corporate compliance. These are all ways that your business has to be compliant in one way or another. So if you think about your staff is just going through, or your bookkeeper is just going through and making sure things are categorized and balanced. However, they may not meet a policy compliance, a federal compliance, a state compliance, a corporate compliance, or an industry compliance. And that would be something your controller would be tasked to and in charge of ensuring. Your accountant does prepare journal entries for you when necessary. I'm going to caution you to, if you have someone who uses journal entries for all the things all the time, that's a really terrible way to track your finances and do your record keeping. Journal entries tend to create more messes than they solve for. They are band-aids to the problem instead of fixing the problem. They are very necessary at some points in time, which is why they even exist. But I really encourage you, if you have somebody that's working for you that all they do is plug journal entries instead of actually do the level of work that it takes to fix the transactions themselves, move on from that person. Your business will benefit from that move for a long time, versus keeping that person that is not actually doing the transactional work, is just slapping band-aids on everything. Your controller, however, will review and approve journal entries. For example, when we do controller work, we go in and we start looking at all the journal entries that have been plugged by somebody along the way, and we reverse them, we delete them, we go back to the transactions, we actually record and correct the information if we can, if that's allowable, and actually make sure that the books are audit proof, that the books are corrected, and that year over year comparisons are available for strategic business decision making. So a lot of accountants are not thinking in terms of business strategy, long-term planning, year over year comparisons. They are simply either just thinking money in, money out. Does it balance? Does it reconcile? Tax return? I'm done. That's great for the start of your business and getting clean, accurate books to work from. But as your business grows and as you become more and more intricate in your business needs, that does not work anymore. You need somebody that's actually thinking ahead for you, that can recognize and call out things in your numbers that they know because of their experience and their education that you don't even know yet, where you have problems. And just doing general journal entries to correct problems does not give you that result. The accountant will maintain your general ledger, which means they will make sure all the ins and outs of your business are being recorded, but the controller will manage the chart of accounts. So the chart of accounts is every single thing that your business needs, and I call it the Bible of your business. It is the start and finish of your entire business transaction needs. So it's your income, your expenses, your cost of goods sold, your assets, your liabilities, and your equities. It's everything. A controller is going to go in and make sure that the chart of accounts is in alignment with your corporate, federal, state compliances, as well as your industry compliances, and that it makes sense for your business so that you have proper documentation of all the things happening in your business to use on your financial reports, and then bring to the table when they when they see something that doesn't quite make sense or needs to be added or taken away or is being used incorrectly. The accountant will assist in month-end close. So they're going to reconcile, they're going to make sure all the final entries are made, they're going to ask for supporting documentation, they're going to make sure receipts are entered and bills are entered and payments are made, and they're going to do all those things. The controller is going to own the month end. So they are verifying the accuracy and legitimacy of the close that's been produced by the accountant or in-house staff by looking at the source doc, comparing it to the numbers, verifying the numbers are correct, asking questions about things that are not quite self-explanatory, and then assigning corrections that needed to be made in order for the month-end close to be accurate. So basically, you do it and they confirm it and verify it, and that's them owning it. Because if it's not confirmed and verified, that was their job to make sure it was accurate. The accountant will file your taxes and handles compliance. So in most cases, not in most cases, actually, in small business, it's very common for you to have a bookkeeper, a tax preparer, a controller, maybe another even CFO or tax strategist on a finance team. You have all different people. It's also common, but not necessarily as common to have one person that does the accounting and the tax preparation all the way through. I actually think having a team, a collaborative team, and this is a personal opinion, this is not a right or wrong scenario, but having a team that can cross-check each other, have checks and balances, be looking out after each other's work and your best interest as the customer makes a lot of sense. But in that case, the accountant, tax preparer, CPA, whoever you have, would be doing all that work, and they coordinate with the controller for audit purposes and advising purposes on what needs to be different, if there's new industry updates for compliance, if something's been missed internally, they're going to cross-check it, they're going to bring up any maybe potential fraud concerns to the controller, not to the in-house accountant, who's potentially the one missing it in the first place or doing it in the first place, depending on the scenario. They're going to go to the controller to work through those things. The accountant also is going to create basic financial reports. So that's your P&L, your balance sheet, your AR summary, your AP summary, things that are just organic to every and any business. Whereas a controller is going to dig deeper. They're going to go a layer or two or three deeper than the overview of the business, and they're going to pull out different types of information and reporting that you can then use to make those strategic business decisions and have some strategy versus just, okay, here's a report, I hope you can read it, right? The in-house accountant is going to use your designated accounting software. In our land, it's QuickBooks Online only, but there are other things out there. So the accountant is going to use those tools, and a controller is going to take it a step farther. A controller is going to have access to other softwares that connect with your accounting software that help pull out data and make updated reporting, and are going to do a more analysis type work with the numbers that have been entered into that software to begin with from your in-house or outsourced bookkeeping team. So they take it a step further in every single role than you're getting from your accounting team or your bookkeeping person. Your in-house accountant is going to follow the SOPs that you have put in place, and they're going to do the things you want the way you want to do them, or the way that best works with your business and their business. While a controller may even design and enforce the SOP. So they're going to oversee things and go, you know what, this isn't a great process. We need to put some checks and balances in place. Let's do it this way, XYZ, bring it to the business owner, have a meeting about the fact of why they feel this way, and then implement and train the in-house team or even the outsourced accounting team on the new processes. whereby which they then follow and make sure that those processes are being used and implemented correctly. They're kind of oversight over the accounting team that way. The accounting team then does work under the controller in essence, because everything they do, the controller has the ability to come and say, this is not right. This needs to be adjusted. We need to implement a new strategy here. This isn't helpful there. You're missing the boat here. Please update how you're recording this that way. Here's a new chart of account to work with. So they're really working under the controller more than working under the business owner at that point in time, because the business owner is then leaning on the controller to confirm the accuracy of everything that the accounting team is doing. So then the controller is managing the accounting and finance staff. At the end of this, we have the accounting team is doing KPIs, error rate, journal entries, and ledger accuracy. So they're really just making sure everything is accurate. They're checking source documentation. They're asking for the receipts. They're clarifying with the direct person, whether it's the business owner or an employee or a subcontractor of that business, to make sure as they're entering data, it gets done correctly. Whereas the controller is going to have more sight on the cycle, the close time, the reporting accuracy, and audit findings than the in-house team, because they're auditing what the in-house team has actually done. So there you go. That is really the main differences between your accounting professional's job and your controller's job. Now, with that being said, let's talk about pricing. When you're engaging an accounting professional, whether it's in-house staff, you're going to be looking at a minimum to get somebody qualified who knows what they're doing, who knows the software that you're in, who knows the industry that you're in. I haven't seen anyone under the $40,000 to $60,000 range minimum, period, in this day and age. So to bring in a qualified employee that you don't really have to train on how to do accounting, how to do bookkeeping, which is such a dangerous position to be in. If you're a business owner and you're engaging so to speak, a professional, and then you find out they don't really know what they're doing, it is a really hard place to be. You're between a rock and a hard place, because now you don't know what you don't know. You were leaning on them to do their job. They don't know really how to do that job. So now they're learning on the job, which means your business is suffering the consequences of them not actually having the proper training and knowledge and education to put you in a position to be audit compliant, to be audit proof, to be strategic about your growth and decisions. And in general, they could be costing you a ton of money on the back end when you have to then go pay to clean up the mess that they're making. So I really caution you to vet any in-house bookkeeper that you're going to hire or accounting professional that you're going to hire. We do have a whole mini masterclass on vetting those people, and we actually do also provide that service. So if you're getting ready to hire, we'd love to help make sure that you're making a good decision for your business. Now, that being said, I said that's the low. So I'm seeing more across the country. So accounting is becoming less geographically dependent and more knowledge based. We have a giant deficit in the amount of people who are entering the accounting industry post COVID, and we had a huge exit in COVID of over 300,000 professionals that left the industry. So we have a deficit in who's joining and coming on board. We have all the people that have left. Now we have another generation that's really starting to think about retirement and exit plan, which is the boomer generation, leaving just because it's their time. So that being said, people are getting more and more, or I should say, less and less flexible with the salary that they need and can support their family needs in accounting. So it used to be like, oh, if you're in, somewhere remote in Ohio, you could get away with paying somebody like $20 an hour to do your bookkeeping. Now you really are going to find the best person you can find, which may not necessarily live in your direct geographic location. And I'm seeing more like $40 to $50 an hour on average is what those individuals are expecting when they are actually qualified and knowledgeable and can do what you ask them to do. Now, if you find somebody who's like, oh, sure, I'll take 20 bucks an hour, that's actually scare you. Because that means they probably are learning on the fly at your expense, and most likely aren't necessarily qualified to do the job correctly. So that's on the accountant side, on the accounting professional side. If you look at controller wages, typically across the United States, they are starting in the $90,000 range in a small area that's, not necessarily a big town, all the way up to like the 120 to 130 range, depending on experience, knowledge, and scope. Then we get into fractional CFO type situations or CFO propers, which are full-time CFOs for your particular business. And now you're starting in the 150 and up. So as your business grows, the complexity of what you need grows as well. And that's why all these different people need to come in and make sure that you have a team of people looking out for you, not just one individual that you're hoping can do all of it. Because I guarantee you, if someone is a CFO making $150,000 a year, it does not mean they can't do the bookkeeping, but do you think they're going to or want to? Absolutely not. They are going to need the accounting team to do their job, the controller to do their job, and then they are using the controller's work, verified work, to do all of your strategy planning, successions, build outs, all of that for you at that time. So, it does go in different phases for your business. Most small businesses can get away with one or two accounting professionals, which could be a bookkeeper and a tax preparer and a controller, and you're pretty much good for a while until you get to that point where you need full-time everybody and a CFO. But then price wise, if you expect a controller to come in and do the type of work that we just talked about, you're looking at a minimum of about $90,000 a year. However, if you have an outsourced fractional controller who's still doing all of those things, but you are not their only client, therefore they are not spending 8 hours a day just on your business. They have flexibility and they can control their own hours, and they do the scope of work in their own time frame. You're going to pay a lot less. For example, our controller services start at only $2,500 a month. So you're automatically right there saving $7,000 a month over what you would pay somebody who's qualified to come in-house. Then take in consideration with any outsourcing engagement whatsoever, you're not paying payroll taxes on that engagement when you outsource it. You are not having to provide the benefits. And trust me, these people at these levels are going to expect benefits of some kind if they're going to give you all of their time. You're not paying for training, because if you hire someone in-house, you have to then make sure that you facilitate their training, their equipment, their knowledge base on the softwares that you're using. An outsource is just expected to know that. And because it's their business, if they have to learn any of that, it's on their dime, on their time. They have their own equipment. You don't have to have like their company email. In fact, you can't have a company email for someone that's outsourced, because that then is a direct implementation of employment, right? So you don't want that. They have their own everything, their own portals, their own emails, everything. So that's an expense you don't have on them. You do not have to then pay workman's comp on their time or their services. So that's an expense you don't have. There's lots of expenses you don't have. You don't have to pay for their vacations. They may take a vacation and you may get that email that, hey, I'm going to be on vacation, so, contact Susie Joe while I'm gone, or I'll just talk to you when I get back. But you're not paying for that. And you're not paying for downtime, because they're still going to get that work done whenever they can, or they're going to delegate it to their team. So there's lots and lots of ways that you save money when you outsource services like these, because as soon as you bring someone in, all of those expenses come into play and more, depending on the business. So I hope this was helpful in you discerning what the differences are between accounting and controllership. If you're at a point where an outsourced accounting firm is not a good fit because you really need them all day, every day, I highly recommend that you do hire in-house at that point in time because you're going to get a much better result and faster, quicker result. However, then having that controllership on the backside ensures that somebody is looking out for the health of your finances, for the consistency, for the scope of work that you or for the SOPs that you've set into place, looking out after policy and procedure, bringing up things that maybe an internal person wouldn't think to bring up because they're the ones doing it, so they're not thinking above it and beyond it. All of those things, ensuring the accuracy. I can't tell you guys how many times I've gotten a client who had someone working for them basically full time, who they thought had their back and was doing the best job they could do, and was just making a complete and utter mess. In 10 years, I've seen that maybe almost as much as I've seen a business owner make a complete utter mess because they just didn't know what they didn't know. These are supposed to be skilled, paid professionals that and you, if you don't know what to look for, if you don't know what you don't know, if you're leaning on them to do the job and you don't have a third party looking out after the quality of their work and the security of your business, you may be not even knowing what's going on behind the scenes. And then it comes tax time and you take this is mostly what happens when we get a cleanup project. Business owner takes their P&L and their balance sheet to their tax preparer or invites them to QuickBooks and the tax preparer says, I can't use any of this. This is crap. This isn't useless because of XYZ. Now the business owner has to pay for a cleanup, has to pay in a short timeline to make their deadlines, has to have an added expense for something they already thought they were paying for, not to mention all the strategies and things that weren't implemented that they may have lost even more from not being able to do because their numbers weren't accurate. I'm going to tell you a quick success story since those are all kind of leaning in the negative direction. We just helped a client through controller services who has an in-house team, 3 people. So they have 2 bookkeepers and a senior accountant in-house doing all their work. Now they are very active contractor company. And we asked the question, is everything reconciled? Yes, everything is. They answered it. They did the work. They thought they did the work. We go in and we see over $250,000 of overstated income for on the P&L. We knew immediately by what we were looking at something wasn't right, and we were able to go in and address that with their in-house team and get it resolved and teach them then how we found it, what we knew about it, why we knew it was off. It's not a point the fingers blame game. It's an education. It's the fact that that team did not understand the full circle implications of what they missed or what they didn't know. I'm not in charge of hiring that person's team, but now I'm in charge of making sure they're doing their job right. And when we found that, imagine had this business owner, just taken the word of his team, who is working very hard, that just doesn't have the skill set, and turned in a report to his tax preparer that had over 250,000 inflated sales on it. They didn't do that maliciously. They weren't even not doing their job. They were doing their job, but there was things they didn't know to catch that were mistakes in the books. So that's where we came in. We're able to cut that down. The business owner, another thing about this is when you're having your strategy meetings with your client or when a controller is, that controller is taking into consideration all these things that the business owner is saying, that they think they're losing money, they think they're making money, they want to implement a new product or service, they want to expand markets, they want to save more, they want to start providing 401ks. They're taking all this information and they're reviewing the numbers that the accounting team is doing to see how we can make that happen, whatever the business owner's ultimate goal is. I knew from those conversations that the business owner thought he was losing a lot of money. So when I saw on the P&L that the bottom line showed like $88,000 in net profit for the year, number one right there, something's off. If he thinks he's losing money, but this is saying 88,000, I immediately know somewhere something's off. And so I can start looking through things. But then on the balance, that was the P&L. Then on the balance sheet, I saw the cash balances, which were hundreds of thousands of dollars more than the bank statements showed at the end of the month. That was key number two. So I was just able to start going in and unraveling a puzzle. Anyway, that's just one of the success stories of having that controllership in place to review either your work, if you're doing it yourself, or your team's work, regardless if they're outsourced or in-house. I hope this was helpful. We will see you again on the next mini masterclass, which happens in 2 weeks on the fourth Thursday of the month. And have a great rest of your week.